Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news rising oil prices are reigniting inflation concerns, and even equity investors are noticed. Bond investors have bid up benchmark bond rates. The Fed next has to deal with this risk in just over a month, but that investors are moving now indicates the heightened concern that Trump's quagmire isn't getting resolved anytime soon. Certainly his promise of a deal with Iran very soon has vanished. Meanwhile, the Yemeni Houthis have struck Saudi-related tankers and hit a Saudi oil refinery, so the conflict is spreading. Markets have reacted as though they expect inflation to rise from here. In Japan, their official Economy Watch's July survey is signalling continued improvement, especially in their services sector. These survey results took a sharp tumble when the US attacked Iran and the Strait of Hormuz was shuttered, but since then it has climbed back as time has shown that most of the world has adapted effectively, and that includes Japan. Strong exports and a weaker currency have helped. And you may recall the recent deadly earthquake in the historic city of Kumamoto. But that hasn't stopped Sony and Taiwan's TSMC announcing yesterday a $6.3 billion new joint venture into advanced imaging sensor plants there. Indonesia's consumer confidence fell in July from June to its lowest level since April 2025, although still in positive territory. The moderation was largely driven by weaker assessments of current economic conditions. And staying in Indonesia, their government has appointed the long-experienced deputy central bank governor to the top position made vacant by the president firing him, foregoing the opportunity to appoint the daughter of the president. This will reassure financial markets that some Turkish-like instability is being avoided. In Australia, bank shares took a beating yesterday, with Westpac down 5.9%, CBA down 2.1%, ANZ down 1.7% and NAB down 2.4%. The reason is a Westpac third quarter market update that shows their mortgage applications down 11% in the period and are running down 20% following their federal budget. Almost all of this fall away is because residential investors are pulling back because the expectation of capital gains is vanishing. Westpac says investor credit growth will fall from 9.1% this year to about 4.5% in the next 2 years. They expect little change in demand by owner-operators, though. And don't forget there is an RBA monetary policy review later today. No one expects any official rate change, but given the high and sticky inflation levels, there will be a lot of interest in their analysis of why they aren't moving to quash it. The US Treasury 10-year yield is now just on 4.70%, up 4 basis points from yesterday at this time. And the price of gold has risen to $4,364 an ounce, up $21 from yesterday. Silver has risen $1.50 at just over $65 an ounce. And oil prices are up $4 from yesterday at just under $82 a barrel in the US, while the international Brent price is now just under $87.50 a barrel. Hormuz transits have dried right up. There have been no crude tankers and only 2 cargo ships exiting over the past 24 hours and 5 entering for new loads, all Iran-linked. The Red Sea activity is where the focus is shifting now and is still low with less than 20 either way at the Yemeni choke point. The Kiwi dollar is down 10 basis points from yesterday at just over 58.8 US cents, against the Aussie with little change to 83.4 Australian cents. Against the euro we've held at 51 euro cents. That all means our trade-weighted index starts today at just on 62.5, which is down 10 basis points from yesterday. And the Bitcoin price starts today at $63,860 and down a full 2% from yesterday. Volatility for the past 24 hours has been modest, however. It's not on plus or minus 1.2%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.